What's up, stackers? Welcome back to the Daily Stack Report. Hope everyone had a great day today and was able to stack some silver or gold. Today was a record day. Gold pushed to a new all-time high around $5,183, while silver tagged $113, and the gold to silver ratio compressed near 46.5, meaning it takes 46.5 ounces of silver to purchase 1 ounce of gold. That's an aggressive ratio move, meaning silver is keeping pace with gold in a way we don't see often. Hey, if you want daily non-fluff gold and silver coverage with sources you can cite, hit that subscribe button now and you'll stay ahead of the times. Here we go. Let's start with the market story in plain English. Gold didn't just go up, it repriced higher again and printed another record. Reuters highlighted that safe haven demand has been persistent, with gold trading near record territory and investors watching geopolitical and policy uncertainty. Silver, meanwhile, continues to trade like gold with turbo. It has been more explosive than gold in 2026, and that's why you're seeing the ratio compress so hard. Driver number one. What's driving all of these moves right here? Let's go over a couple of them that I have noted down. The first one I have is safe haven demand is still the main fuel. Reuters reporting has consistently pointed to safe haven demand tied to global uncertainty and policy risk as a key tailwind. When markets are nervous, gold gets bought as a risk-off reserve asset. That demand can be steady and deep, which is exactly what record highs usually reflect. Driver number two. Silver has a retail momentum component. Investopedia describes silver as gold on steroids and noted a retail-driven surge with big flows into silver exposure. That means because retail momentum can push silver faster than gold, but it can also create violent pullbacks when traders take profits or get forced out. We saw that yesterday with that big drop after we hit that record $118 mark. But guys, driver number three that I have is volatility as part of the story. It's not a side note, it's the main thing right now. The Financial Times unhedged discussion framed this precious metals run as increasingly speculative and volatile, with silver especially prone to sharp swings. So if today felt like a roller coaster, that's not a glitch. It's a feature in a crowded, fast market. Guys, you can get used to that right now. There's going to be a lot of volatility in the markets. But hey, I say institutionals buying in. Some people are taking profits. And then when people take profits, it just looks like more people are buying. And so we do like to see how when the price goes up, and then it goes down, we go back up more, and then the next time we go down less. So it's not about necessarily dropping all the gains for the day, but whenever we do reaccumulate those gains, how much further do we drop? We're seeing higher highs and lower lows, which is a perfect marker for a healthy bull run. So guys, let's get into the gold to silver ratio. Because if you want to sound like you know what you're talking about, when you go to these local coin shops, you got to kind of know the gold to silver ratio. It's a key component to the silver and gold market and silver and gold trading. When you're buying or selling, play the ratios and you'll end up having more silver in your pocket. The gold to silver ratio is simply gold divided by silver. When the ratio drops, it usually means silver is outperforming gold. That can happen when silver gets a strong mix of safe haven buying plus speculative or industrial demand. At a ratio near 46.5, silver is behaving unusually strong versus gold. The key takeaways isn't a magic number, it's that silver is being treated as both money and a high beta trade at the same time. So guys, make sure you're keeping an eye on that silver to gold ratio. It's huge whenever it comes to the silver and gold markets. But one thing I want to bring your attention to is APMEX check, and I want to see what Eagles are going for right now. Silver Eagles, spot context, and the premiums that we're dealing with right now. Okay, guys, on APMEX, 2026 1 ounce American Silver Eagles, BU. BU means brilliantly uncirculated. They are listed around $100, $116.90 right now. And that is higher than spot price. Guys, you can almost guarantee you're always going to be paying a premium on the Silver Eagles. Now, let's go to the 1 ounce American Golden Eagles. APMEX 1 ounce category shows pricing in the 5200s depending on the product and the grade. Some listings go for around 5250 while some around 5200. Just kind of depends on the grade a little bit. But a related APMEX page snippet shows 1 ounce gold BU is listed around 5,320. So guys, with gold's huge spike today, is that worth it? Do you think gold is going to go to 5,500 before silver hits 120? Will gold hit 6,000 before silver hits 150? Let me know in the comments. I want to see what your guys' opinions are. But when silver spot is roughly around the low 110s, $110 on major feeds like today, you're still paying a premium for Eagles. Same for gold. If spot is around 5,060 to 5,100 zone and Eagles are around 5,200, that reflects a brand premium plus availability plus dealer spread. Dealers are going to make their money no matter what the price of silver or gold are. You can always expect to pay that premium or a spread. Same concept, same thing, just two different things, or two different vocabulary words, I should say. So, guys, what's the public saying? I've been doing some research, and this is kind of what I've gathered on today. Now, on Reddit's Silver Bugs, you're seeing a mix of excitement and frustration. People comparing app tickers versus live charts and pointing out how a falling dollar can feed the move. You also see a popular narrative that physical tightness and premiums matter more than the paper quote. The idea that if you can't buy it near spot, the real market is elsewhere. Whether you agree or not, this sentiment matters because it drives retail behavior. Buying dips, chasing spikes, and clearing dealer inventory fast, retail flow doesn't set global spot by itself, but it can absolutely intensify the move, especially in silver. Right, guys, if all of a sudden everyone starts selling and no one's buying, that's not good for the dealers because they are going to raise their premiums because they're going to have to continue to make that money no matter where spot price is. And on the other side, if everyone's buying and no one's selling, then they're going to have to lower those premiums on their sell spread because they're going to need more silver to reamp their supply because everybody's buying. So it's always going to be a balancing act. So whenever you go into your local LCS, local coin shop is what LCS stands for, always expect to pay that premium, or whenever you're selling, there's always going to be that minus. So like always, guys, call around, see who's buying at what, and just do your research. It's always about research, guys. Don't be afraid to make a couple phone calls. No one's going to ban you if you make too many calls, right? It's part of the market. They're getting hundreds of them a day. Don't be afraid to be one of them. But let's talk risk. All right, guys. When silver can move fast, it can also move down fast. When it up fast, down fast, it just kind of happens. Today's kind of tape, a fast surge and sharp drop window, is exactly what happens when volatility rises and liquidity gets thin. So here are two things that can be true at the same time. This rally is real. Gold making new highs is not normal noise, and silver can punish late chasers because it's smaller, thinner, and more momentum driven than gold. So don't be one of those people. I'm not a financial advisor, but don't be one of those people that's always saying, I'm going to wait for the next dip. I'm going to wait for the next dip, because we've seen that multiple times, and look what happened. Now we're around 110, 115, and people have been saying that since it's been $50, $60. I'm going to wait till it goes to 50. When it went to 70, I'm going to wait till it goes to 60. When it went to 85, I'm going to wait till it goes back to 70. Blah, blah, blah. Okay, guys, don't be one of those people. If you're interested in the silver market or gold market, don't be afraid to put some cash aside and purchase when it's right for you. Okay, guys, that's not financial advice, but that's what I do. I put away cash that I can, and I buy when I can. I play the gold to silver ratio, meaning I trade in whenever I can make a profit, and whenever I can't, I hold. So guys, that's just my personal stacking strategy. If you go to some of my more recent videos, I do talk about how I can get some free silver based off trading these premiums. By calling around, you're going to notice some people have different premiums on their buy-sell spread, and so you can always take advantage of that. So don't be afraid to get creative in this market, because it is crazy and it's moving fast. Bottom line I have for you guys, gold printed another all-time high, silver stayed hot, and a 46 handle gold to silver ratio tells you silver is still running with serious strength. If you want tomorrow's update with sources, spot context, and what the physical market is charging, hit that subscribe button and join the Daily Stack Report community. Also, do you guys think silver is going to hit 125 first, or gold pushes 5,500 first. Let me know in the comments what you think. Guys, stay safe out there, stay smart, and continue stacking. I'll see you tomorrow.